it seems like there's a huge disconnect in what sellers are asking and what we're able to offer now. I'm starting to see that more and more, although they are, the sellers and the brokers are becoming aware that there is a change. But so what we're doing is to really look at ways to evaluate more deals. How can we scale this and really underwrite more deals? Because I think that's what it's going to take. You're going to have to look at more to get the one that works.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Colby Fryer is a multifamily investor specializing in C and B- class assets. Anything over 100 units. Colby, welcome to the show.
Awesome. Thank you for having me, man. Appreciate the opportunity.
The pleasure's mine. 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
My background's in civil engineering, doing a lot of construction, project management. So it really transitioned well into what I'm doing now in multifamily. So we started investing in single family in 2013, bought six houses, and then decided, well, that's not scaling as much as we'd like it to be. So jumped in, got a coach and a mentor, and over a year and a half ago, and right now we're sitting at over 136 doors of multifamily. So it's been a heck of a journey, really exciting.
I'm sure it has. I mean, going for C and B- class assets and coming from the engineering perspective, everything I know about engineers tells me that you guys really like to know, like, to a very, very fine degree, what it is that is going on. You're getting into C and B- or class assets, and there's quite a bit of uncertainty, I would think, sometimes when you're investing in those projects. How do you overcome that?
Yeah, so it was huge to have guidance of a coach and a mentor through the process, somebody that had been through that a little bit. But there was definitely some challenges to learn, and having that engineering background, you like everything lined out and kind of organized in a package. And this business is not that way. You kind of put things together on the run, and it's crazy sometimes, but well worth it. Just a lot of challenges to overcome for sure.
Right. And having a mentor is one thing. What do you feel like some of the questions were that you had early on that were like, I guess, things that made you concerned about your next steps in this business?
Some of the big things were how are we going to get money? How are we going to find the deals? All those things that you have to wrap your head around. And you kind of have to do a little bit of both. And so the big thing for us was to start reaching out to family and friends and just let them know what you're doing. Tell everybody, And so you start to build those relationships, start to network with people. And that was really big for our first capital raise that we did. But at the same time, you're meeting with brokers. And so I find that's important for an investor. You don't want to just be a one trick pony show or have one, wear one hat per se. You want to be able to do multiple things when you're starting out. I think that drives a lot of value, brings a lot of value to a team in order to get involved in this business.
How did you select your first market?
So our market kind of came through my network and the mentorship group that I was in. Also, I'm from New Mexico, so I grew up there and knew Albuquerque well, which was our first multifamily asset that we purchased. And then Las Cruces, I went to college there. So a lot of background in the state and familiarity with the market. And so that really helped.
Right. That absolutely does help. Tell me about this. I mean, was your, you went from single family investor in 2013 and 2019, or I can't remember when you said it was, but you decided, hey, you're going to go into multifamily. Was there ever consideration of any other commercial real estate asset classes?
Not really. I had seen, looked at mobile home parks. I had looked at a little bit of office space in terms of businesses and that sort of thing. really like the mobile home parks and not opposed to that. May do that someday. Storage, I've seen that a little bit, but I think multifamily was really what we wanted to focus on. I think you can get, if you start looking at too many things, you get that shiny object syndrome, and I think that takes away from your focus sometimes. And I think, especially to start with, you need to just focus on one thing. And that was why we went with multifamily. Just great asset, I think, in terms of cash flow stability through recessions. Just can't beat it.
Right.
That's why we chose it.
Absolutely. Buying C and B minus assets, probably more in the C class assets. This question may be framed, but how did you know, I guess, when you're looking at those assets, there can be, what we call a lot of hair on the deal. How did you know you could turn them around? Yeah,
that's a good point. And we always heard that you got to be really careful when you go into those types of deals, especially on the C class. You got to really do your due diligence. But our main focus was just really trying to get a deal, and this seemed like a great opportunity. And that's the thing with these C assets, is even though there's a lot of hair out on them, there's a lot of opportunity there because you have the value add. And so if you could turn those assets around, you can typically get them at a pretty reasonable price, and then drive that value, increase the value, which can really help your investors. Now, on the other side of that, there is increased risk with those investments, which we've learned a lot about.
Tell us a little bit about that. I mean, is there anything you can, as you kind of review, the last year and a half, is there anything you feel like you could have done better or that you would do differently?
Yeah, I think during our due diligence, we could have done a lot better job. There was some things there we could have seen, and I'm talking about our bigger deal in New Mexico that we did. It was a syndication. This particular deal, like you said, had a lot of hair on it. And when we visited the properties and did our inspections, I think we missed out on seeing some of the issues that were there with tenants. We had some problem tenants that we're having to deal with now. And there was some signs we missed, like broken windows and other things that could have really helped us when we started.
What would you do in that case if you could go back and say, hey, look, there's problem tenants on this property, you see these broken windows? How would that have changed the conversation, either with the seller, with the broker, or even amongst your team?
Yeah, and we did have those conversations. We knew some of it was going on, but I think I really would have got something like a contractor or really a person that was knowledgeable in that space, property manager, to go visit the property with us and really give us an idea of, hey, what exactly are we going to run into here? And that would have really helped. Of course, you never know exactly. Sometimes you just have to go with your gut. But I think that's what we would have done differently, for sure.
Right. And so let's say they came to you and said, all right, Colby, you got some problem tenants here. It looks like you're going to have a really hard time collecting rent from them. You may have a higher than normal vacancy. What would have been your next step as you looked at the deal?
We probably would absolutely have gone to the seller and talked to him about how we could possibly resolve some of those issues, maybe negotiate on the price, that sort of thing. Yeah, I think that would have been really good.
So what steps then? Let's ask this. What are you guys doing now? What's your active plan? Because these are things that people can learn from and say, oh, man, they've got vacancy at a property. You've got problem tenants. New Mexico, as far as I know, isn't necessarily a landlord-friendly state. Maybe correct me if I'm wrong. I don't own anything in New Mexico. But, what's the plan going forward? How do you guys overcome those challenges now?
It's sort of in between. It's not landlord-friendly, but it's not tenant-friendly, the most tenant-friendly.
Okay.
But, so the steps we're taking now is, our property manager has done a great job of getting problem tenants out. And so our effort now is just really focused on marketing, advertising, and filling up our units and turning the units, getting those ready to go. So we do have a little bit higher vacancy, but that's our main focus, is turning that around as quickly as possible.
Right. And have you guys been able to achieve rent bumps with this property as you do renovations? I mean, is that the
there's huge
value add
demand
plan?
for renters there, so that's been good. So we expected to increase our rent to $650 for 1-bedrooms and $750 for 2-bedrooms at this property, and we've been able to do that very successfully.
That's really cool. That's really cool. Tell me about raising money. I know you said that you've gone out, you've talked to all your investors or family and friends. Was that a hard conversation initially? Especially without a track record in the space, or how did you work that out?
Yeah, it is. It's especially coming from an engineer, more of an introverted type person. So it's something that's a challenge for sure. But I think once you start doing it and you talk to a few people, it gets easier and easier. And you just, I think you just got to own up to who you are and what you're really doing, and you have to come up with that new identity. I'm a apartment investor now. I'm not civil engineer. I'm not whatever else. You have to identify that with yourself, and when you do that, that really changes the game for you and helps you to connect with people. And people want to help you if they trust you and they like what you're doing.
Yeah, absolutely. Yeah, coming from the civil engineering background, what was the tipping point for you when you could walk away from being a civil engineer and go directly into? I
actually haven't walked away, still doing that, but still working the W-2. My plan is to transition out over the next couple of years. But that's kind of a tough thing too, because when you're still working, you got to tell. I mean, people are going to ask you, "Oh, so what do you do?" And I mean, you got to tell them. But it's not the first thing I identify with. I always say I'm investing in multifamily properties.
Right.
And if they ask, and I say, yeah, I still work, but I'm transitioning out over time.
Right. Right. No, that's I think that's great, and that's a good point. Is there what's the plan for that? Have you hit a certain, say, hey, when we hit a certain revenue number, when we hit a certain number of assets under management? I mean, have you kind of built the plan for the exit, or is it really when you want to?
It's a plan. My plan is 4,000 doors in 5 years. I would like to obviously do less years for that, but that's the goal and what I'm pushing towards. And I think that would be the number that would offset our income. Really, what I define as success in this business is replacing my income that I'm making now with the passive income from real estate. And at that, it's not the number of doors, it's not the money. It's just really, can I support myself and my family off the real estate and not have the job anymore? That's it right there.
Right. 4,000 doors in 5 years. That is, that's an amazing goal. I love it. How did you guys select that number, and what do you feel like you were going to do to achieve that goal?
Yeah. So the thought was, based on that number of doors, and the income off of that using the syndication model, that would offset my current income that I'm making. It's a lot of doors for sure. But,
right.
To get there, the main focus is you got to take the baby steps. Okay, I got to do this many deals this year, this many deals the next year. And so you set those goals and your priorities, and then you break that down on a more frequent level. Okay, I'm going to underwrite this many deals a week, put in this many LOIs, and so you start to build out your steps towards that progression just to make sure it happens.
We're seeing, obviously, an incredible amount of interest in really all real estate asset classes, but especially in multifamily. Seeing cap rates compress, and we're also seeing rates go up. What are you guys doing in this environment to, one, continue to find success, and then how are you offsetting, those two kind of obstacles?
Yeah, that's a very good point. And it is difficult in this environment. It seems like there's a huge disconnect in what sellers are asking and what we're able to offer now. I'm starting to see that more and more, although they are, the sellers and the brokers are becoming aware that there is a change. But so what we're doing is to really look at ways to evaluate more deals. How can we scale this and really underwrite more deals? Because I think that's what it's going to take. You're going to have to look at more to get the one that works. It's not going to be as easy as it was before, for sure.
Gotcha. So underwriting more deals is one of the plans. Is there, are you guys doing additional broker outreach? Are you doing your own off-market outreach? What is there anything on that front?
More just working with more brokers and trying to build those relationships, looking at more markets to get the deal flow. We're looking at Houston and other areas of Texas, of course, New Mexico. Tucson has been a big focus of ours. We're also interested in Phoenix. We'd love to get something here in Tucson.
Gotcha. Very, very good. How have you guys defined who does what on your team? I think you said there's 5 of you. Is that right?
Yeah. So our team is made up of, my partner, Denny, and I, we kind of handle the asset management, property management, overseeing the property manager, the bank accounts and the meetings. And then also Les, he helps with a lot of that. And then we have a couple other partners that help us on the money raise side, but they're active in the meetings as well. So everybody has to be active on the asset management side doing something.
Right.
So we kind of split up our duties, who handles the property manager, who handles social media, the website, and different items. So we kind of spread that out, but we really focus on the money raise part of it too. Follow us.
Gotcha. That is really, really cool. If you were to say to someone else and they said, hey, Colby, I want to follow in your footsteps and I like what you've done. You've gone from no deals to having 136 units here in a year and a half. What would be the first thing you'd tell them to do?
I would say, really you just gotta jump in. You're not going to find the perfect deal, I think, to start with. But I think one thing that we did that really helped on our first deals, we found a deal that probably wasn't the best revenue generating deal. It didn't look that good on paper, but a lot of the work was done. The CapEx was done on it. There wasn't a lot of hair on it. And so I would encourage people to possibly look into that. Maybe you get lower returns, but go with something that's already done. B class, if you can, try C class, a nice C class that's fully occupied with stable tenants. I think that's really important on your first deal. I don't think you want to get into something with a lot of vacancy to start off with.
Right. No, I think that's great. That's great advice there, that there is no such thing as the perfect deal. And I think that's what a lot of people are hunting for right now. And you do need to be selective, no doubt. As you said, there's things due diligence.
And I think if it cash flows and it's reasonable and you can make it work, I think go for it. It doesn't have to be perfect. Right.
No, I think that's great. That's absolutely great advice. Yeah, wonderful. Colby, I love what you've done here so far. You've gone from, you still are a civil engineer, and successfully found a way to scale into multifamily properties. You guys are looking, you've got a clear game plan, you've got your team lined out. I know you said early on that it was mentorship really that helped you in the beginning have the confidence to take the next steps. Talk to us about that here as just kind of a closing thoughts on mentorship. How did you select? Because listen, you and I both know that there's 1,000,001 gurus out there. How did you select somebody that wasn't a guru, but that really would be a mentor for you in the space?
So I, my mentor, Jens, I heard him on a podcast, and I liked what I heard from him. He was on Rod Cleve's podcast. And so we connected on Bigger Pockets. I had looked at a few mentors, and I was actually thinking about going into Rod's program and, the Warrior Group. I know that's a great group, but I chose this group just because I knew it would be intimate, and I'd get the one-on-one setting with my coach and mentor. And I think that's important. I also think the network is important. So the size of the network and the people and the experience, I think that's a big thing to consider when you go into a program. But also the experience level. Really reach out to somebody that has experience and make sure that they're going to be the one that's going to be talking to you and working with you. I think that's a huge part of it.
Right. Absolutely. I think that's those are awesome, very, very valid points as you review. And a lot of people want to know that. I mean, there's a lot of programs out there, and no two programs are created the same, and no two programs are for everybody, or no one program's for everybody. So I love hearing how you made that selection. Is there any other closing thoughts that you'd like to share with our listeners, or pieces of advice that you would give them?
Just be persistent and keep going. Don't give up. I think there's deals out there. You just gotta be willing to meet with brokers. I think the big thing with brokers is to get in front of them, sit down with them, meet them for lunch. And I think that'll really help. They'll know you're serious and you're going to be a player in the game.
Right. I think that's great. Colby, if our listeners want to get in touch with you or learn more about you, what is the best way to do that?
They can reach out to me at Colby@mountainbridgecapital.com. You can email me. I'm also on LinkedIn, Facebook, and my website's www.mountainbridgecapital.com. Do have an ebook in the works, so that will be coming soon, and look forward to getting that out there.
Awesome. Colby, thank you for your time today. I do appreciate it.
Thank you.